New traders often lose money fast because they buy a stock simply because it's cheap and looks to be moving. That feeling isn't confidence, it's pressure. In this video, you'll learn the simple 3-step chart whisperer order that keeps you out of this trap. Most beginners start with looking at the chart because it feels easier, but charts can look good while the business underneath is silently falling apart. Chart Whisperer has a solution to avoid these stocks. Simply flip the order, read the financials first, and if it all looks good, then look at the chart. A company's financials contain many numbers and can seem confusing and overwhelming at first. But don't panic. Chart Whisperer uses a short checklist which guides you to look in the same places, in the same order, each and every time. Start with a free website like Yahoo Finance or TradingView. Type in the stock symbol or company name and open the company page. Now find the tab that says Financials. Click it. Inside, you'll usually see 3 sections: Income Statement, Balance Sheet, and Cash Flow Statement. These 3 reports show how the business really runs. You don't need to memorize everything, you just need to know what to check. First, go to the cash flow statement. This is your starting point. Scroll until you find free cash flow. Some sites show it directly. Others show operating cash flow and capital expenditures, and free cash flow is the difference. Look back 2 to 3 years. Is the free cash flow positive, and is it getting better over time? If yes, that's a green light. If it's negative or getting worse, you need to move on. Next, open the income statement. This shows how much money the company brings in and whether it keeps any of it. Look at revenue first. Is it steady or growing over time? Then glance at net income. It doesn't have to be perfect, but you want to see progress or a clear path toward profit. If revenue is dropping and losses are growing, that's a warning sign. After that, check the balance sheet. This shows the company's strength. Look at total debt and compare it to cash or assets. You're not doing deep math here. You're just checking whether the company looks buried in debt or reasonably balanced. A solid company can handle slow periods using what it already has, without needing emergency borrowing. Once you've checked those 3 statements, go back to the main company page and find market cap. This is what the market says the entire company is worth. Now compare market cap to free cash flow and observe. If the company is valued very high but produces very little cash, that often means hype is doing the heavy lifting. Chart Whisperer doesn't chase hype. We want value and strength to make sense together. Here's another beginner trap. You look at the financials and think, it doesn't look great, but the story sounds good. Maybe it'll turn around. That's how a lot of traders screw themselves and lose money. Chart Whisperer doesn't guess. If cash flow is weak, there's usually a reason. It may be revenue dropping, debt climbing, or costs eating profits. If you don't see real improvement, you walk away. Strong companies don't need excuses. They show progress in the numbers. Don't stop after checking only one statement. Weak companies can hide problems, and that's risky. Chart Whisperer does a fast cross-check. Income statement for revenue and profit direction, and balance sheet for debt pressure. Strong businesses usually look solid across all 3. A common mistake with low-priced stocks happens when beginners think the rules change because the share price is small. They don't. A low price doesn't replace real cash. You still want free cash flow that's positive and improving. That's how you avoid lottery crap stocks that spike on hype and crash when the story fades. To make this work long-term, you need a habit, not a one-time trick. Here's the Chart Whisperer checklist. Cash flow trend first, revenue direction second, debt third, profit direction fourth. Only after that do you look at the chart for timing. Bottom line, good stocks don't hide their strength. It shows up in the numbers. When you focus on real cash and clean financials, you stop chasing stories and start choosing stronger businesses. That's how Chart Whisperer builds watch lists with intention, not regret. If this helped you see the market a little clearer, hit like and subscribe. Chart Whisperer is here to keep things calm, simple, and honest, so you can build better habits, avoid costly mistakes, and grow your skills one smart step at a time.